Yo, what's up guys? Felix from Giant Lifestyle. Welcome back to the channel. In today's video, I'm going to be giving you guys 8 different ways that you can boost your credit score. Now, having a good credit score is a vital piece to financial success and to becoming a successful entrepreneur. Now, if you don't know what your credit score is, you can go to Experian.com or IdentityIQ.com where you can get a copy of your credit report. Now, if there's something on your credit report that you don't agree with, you can dispute it. Now, there are actually 5 different factors that go into play when determining what your credit score is. The first one is timely payments, which equates to 35%. Are you making your payments on time? Are you late? What's the case with that? The second thing is utilization. Are you maxing your cards out, or are you staying either paid off or between the 10 and 30%? And that equates to 30% of your credit score. Number 3 is payment history, which equates to 15% of your credit score. And what is the percentage of your on-time payments? Do you have 100 payments over the course of your credit report and maybe 2 are late? So you have a pretty good percentage of on-time payments. The fourth thing is your trade lines, your accounts, the status of your accounts. Do you have collections, stuff like that? That equates to 10%. And the fifth thing is inquiries, which also equates to 10%. I've noticed over the course of me having a credit report, when you need the money, they run, but when you don't need the money, they basically throw it at you. So those are the 5 different things that go into having a credit score. Now we're going to be going over what are the 8 different things that you can do to actually boost your credit scores. So the first one is having a secured card. So an unsecured card is where you apply for a credit card and they give you one based off your credit score, and they might give you $1,000 or $2,000 and you can spend it at your own free will while having, a minimum monthly payment of maybe, 20, 30, 50, $100. Now a secured card is where you actually go to your bank or your credit union and you apply for a secured card where you're going to be using your own money as collateral. Now there's really no advantage as far as funding with this, but this is going to show your bank or your lender that you're reliable, responsible, and you can make on-time payments, but also that you can keep the balance under 30%. The best thing to do with a secured card to show them that you're responsible is not only to keep the balance basically paid off, but to make 2 payments a month. So if you give them $1,000 in collateral for a secured card, you could spend up to $200 to $300. Now, 15 days before your minimum payment is due, pay half, and then a day or 2 before your actual payment is due on that due date, pay the balance off. So this shows that 1, you don't really need the money. 2, you can make on-time payments, and 3, you could pay the balance off. Now, number 2 is becoming an authorized user. So maybe a family friend, your mother, your father, an aunt, your uncle, your cousin has a card for $10,000. Say it's American Express. I know most American Express cards can add up to 100 authorized users. And if they have a card for the past 5 years, they have no missed payments, the balance is very low, they can actually add you as an authorized user to that card, and you can reap the benefits of that card and all the good history they have over the years. Now, they are going to be responsible for the payment, the balance, and everything that comes as far as the responsibilities for that card, but you get all the good history. They might actually get a card with your name on it after adding you to the account, but most people who add you as an authorized user may or may not give you access to the card, but the most important thing is to have access to that history. The third thing you can do is not open new accounts. When you open new accounts, like I said, they actually lower your credit score. Now, as you open the new account, if you were to open the new account and you make on-time payments, your credit score will go back up. But in the beginning, when you first open a new account, it looks like you need credit. And when you need credit or you need money, it seems as if these lenders will actually, get more scared and lower your limits. I can recall times where I literally have not used a card for months and they increase the limit, and you can get them to increase the limit over time. But while you're building your score, you don't want to keep opening new accounts and getting new credit because it looks like you need the money, and that's going to lower your score. Now, the next thing you can do is actually make payments early. Like I said, when you get your secured card, try to make a payment 10 to 15 days before your actual payment is due, and then again, maybe a day or 2 before your payment is due. This shows that you have the money and the cash to actually pay these cards off, and you're not, strapped for cash and can barely make the payment. Now, while it's better to make at least a minimum payment than no payment, if you can double up on the payments, if the payment is say $100, 15 days before that payment is due, make a payment of $70-80, and then again, once the payment is about to be due, a day or two before that, make another payment of $70-80. The next thing you want to do is keep your balances or your utilization below 30%. Now, some people say to not pay interest by basically paying the balance off in full, which you can do. You can set it on auto pay. But if you want, you can keep your balance at a very low amount, somewhere between 5 and 25%. You never want to go over 25% because it makes it seem like you need the money, and lenders put you at a high risk. They think that if you need the money that bad, there's a chance that you won't be able to pay it off. So if you are going to, for some reason, max out your card, you should pay the balance off in full before the statement closes. So never go above 30%. You can use the card. If you are going to go above 30%, be sure to pay it off or pay it below 15% so you aren't looked at as a high risk. The next thing you want to do to boost your credit score is to delete negative stuff. If you have collections or things on your credit report, you want to delete them. Now, you should never pay a collection company because the number one thing you have to remember about a collection company is the original creditor sold the debt. So if you did business with, say, T-Mobile, and they sold the debt or the collection, which is technically illegal, they sold your information to ABC Collection Company. The ABC Collection Company you never actually did business with, so you can actually get that removed off your credit because you never did business with that company. So any derogatory marks, you can actually dispute it. So look up videos on how to actually, remove things off your credit, because any derogatory marks, whether it's collections, inquiries, a lot of negative things will drastically lower your credit. The next thing you can do to increase your credit score is to pay your stuff on time. You don't want to be late. Even one missed or late payment over the course of 6-7 years of on-time payments can drastically hurt your score. So the most important thing you can do is always pay your stuff on time. And then the next thing you can do is to avoid personal loans. Now, getting a credit card is fine, but personal loans show creditors that, like I said, you need money and you really aren't in a position to pay the loan or all your cards off. I keep saying this thing about needing money, but it's so important that you show these creditors that you can use this credit, but that you can also pay it back in full and on time. Personal loans show creditors that you really don't have liquid cash on hand to be able to pay off the balances. Now, a lot of creditors will give you these personal loans because a lot of personal loans have crazy high interest rates and long terms, which have you paying a lot of interest over time, but they don't look good. So if you have personal loans, be sure to get them paid off and never apply for them again. You're better off getting, charge cards or unsecured cards where you can actually use those to leverage your business. Also look for credit cards when applying for credit cards that have 12 or 24 month no interest periods, because a lot of these credit cards, even though they'll give you high limits, they'll have 12, 24, 35% interest rates, while even though you're using it to leverage your money and make more money, you're paying crazy amount of interest. So there you guys have it. Those are 8 different things that you can do to boost your credit score. Go ahead and implement them. If you're looking for any business resources or to learn about any specific businesses, check the links down in the description below. Be sure to subscribe, and I'll see you guys in the next video. Peace.